Hey, what's up guys? Thanks for joining me today. Be sure to hit that subscribe button and smash that like button and let's just jump right into it, okay? So what I'm going to be talking about today is the Biden tax policies, or at least what he's proposing, and how it's going to affect you as an individual. I'll make another video on businesses and how it affects businesses, but for now we're just going to be talking about individuals. And basically, in order to start, or at least make things more clear, I think that we should start with explaining how the tax bracket works, because there have been a lot of misconceptions and a lot of things that I've heard before, a lot of confusion around tax brackets. One good example was from when I was back in high school. I was working at this job, and somebody that I worked with, like a coworker, told me that he declined a pay raise because he thought he would be taxed more. And so his attitude was like, oh, they tried to get me with more of those taxes, so I really showed them by declining the raise. And basically what I thought was, I don't think that's correct, but I was in high school. I didn't have enough care to know that, it was to look it up or anything. But I just thought, I think you're wrong, and that was stupid to do, and you shouldn't decline your raise. And turns out I'm right. So to piggyback off of that, I'm gonna kind of explain to you right now how tax brackets work. So let's jump over here. All right, so here we have the 2020 tax brackets that I pulled up. I kind of put it in Excel here and color coded them to make them a little easier to read and see. So basically here you have if you make between $0 and $9,875, that money would be taxed 10%. This window right here would be taxed at 12%. So on and on and on up to the 37% top tax bracket, okay? So this is the misconception. So let's say we have somebody making $100,000 a year gross. The misconception is that that entire $100,000, see how it falls in this 24% tax bracket? The misconception here is that the entire $100,000 income will be taxed at 24%, and that's simply not true, okay? So what happens is, this first portion between $0 and $9,875 is taxed at 10%. Then this portion is taxed at the 12%, okay? And then this portion is taxed at 22%. And then this very last marginal portion is taxed at 24%. And that's basically how marginal tax brackets work. So if you happen to jump into the next tax bracket, you're not gonna end up paying significantly more taxes on your entire income. It's just the amount that jumped over that tax bracket will be taxed at that marginal rate. So with that being said, I think now that you understand that a little bit better, hopefully, we'll get into some of the proposed changes that Joe Biden has. Okay, so one of the first major changes that he's proposing is to increase the top tax bracket from 37% up to 39.6%. And this is not a big jump, and I don't think this is such a big deal because it was at 39.6% before Trump's tax reform, okay? So that's where it was before. And he's not changing any of the other tax brackets, at least as of right now, for the proposed plan. So it's just gonna be the top tax bracket that's getting changed, and so that's it for that, okay? And then the second major change he's proposing is a 12.4 Social Security tax on income over $400,000. So right now, if you work at a job, you earn a W-2 wage, you are already paying Social Security tax. You're paying 6.2%, your employer is paying 6.2%. That Social Security tax drops off when you get to an income of $137,700. Basically, in Biden's proposed plan, that Social Security tax will pick back up once you hit a $400,000 income limit, which makes it a donut hole. A donut hole meaning you're taxed up to a certain point, and then no tax, and then you're taxed again at another level. This will obviously affect high income earners. This will affect, people with W-2 wages, and this will affect self-employed people. So as I said before, if you make a W-2 wage, your employer will pay half of it, the 6.2%, you will pay the other half. If you're self-employed, you're paying the full 12.4%, okay? So there's something to keep in mind there. The third change that Biden's proposing is increasing the long-term capital gains rate to the ordinary income tax rate of 39.6% for people making over $1 million of income. If you have over $1 million of taxable income, I mean, that's a lot. That's a lot. And especially if that's all from capital gains, that is a significant amount of income. So this probably won't apply to the vast majority of Americans. But good to note either way, because that's a huge increase, okay? The top tax rate for capital gains, for long-term capital gains right now, is a total of 23.8%. Okay, so that's jumping from 23.8 to 39.6. That's a huge increase. The fourth major thing that Biden is proposing is he's removing the step up in cost basis for capital assets. Basically, what that means is when you purchase, like let's say a home, you purchase a home for $100,000. That's your cost basis. So when you sell it, you're gonna take your selling price minus your cost basis to figure out if you have any capital gains tax that you have to pay there. And so what's happening right now is if you buy a home for $100,000, and let's say you hold on to it for 50 years and then you pass away, that home, now maybe it's worth $500,000. Whoever inherits that home will get their basis stepped up to $500,000. So then when they sell their home, the capital gains tax will be calculated with that $500,000 tax basis. But now, since Biden is proposing to eliminate that, the person that inherits the home will have to pay taxes on capital gains based off of the $100,000 cost basis, which is a significant change. This is really gonna change how estate planning works. The fifth major change that Biden is proposing is a cap of itemized deduction benefits. So he's proposing to cap itemized deductions at a 28% benefit. So what does that mean? So let's say you are in the 37% tax bracket, and that means every deduction, every dollar that you deduct from your taxable income comes with a 37% benefit in terms of reducing your taxes, okay? Because you're in a 37% tax bracket. So what Biden's proposing is to cap that benefit at 28%. So every itemized deduction you take only benefits you 28%. This only is a concern for people above the 28% tax bracket. And this is a good segue to the next proposed change, which is bringing back the P's limitation on itemized deductions, which is another limitation to itemized deductions. It's reducing the power of itemized deductions by another 3% if you make over $400,000. The seventh major change that he's proposing is decreasing the estate tax exclusion to $3.5 million per individual. Okay? And that's big. Like this is primarily going to affect, the really wealthy people. Basically what it means is if you pass away with estate value of over $3.5 million, then you're gonna have to pay estate taxes on those assets. Another big opportunity for estate planning and changes to estate planning here between this estate tax exclusion and the step up in basis. I've been telling you a lot about how these taxes are gonna increase, but he has some proposals in there that's gonna help you and benefit you as well. And these primarily favor lower to middle income Americans. So the eighth change that he's proposing is an increase in child dependent care tax credit. This is a tax credit that you get when you pay for child care throughout the year. You get to claim that child care as a tax credit and you will receive it as a tax credit. So he's gonna increase some limits on there to give you a better tax credit. The ninth change is an increase to the child tax credit, which is different from the credit that I just mentioned. The child tax credit is basically a credit that you get for just having a child. So basically any child that you claim as a dependent, 17 and under, you'll get a proposed $3,000 credit. And any child 6 years old and under, you'll get an additional $600 credit. So this is a huge increase from the current $2,000 credit that you get right now. I think the last major change that I'm going to talk about here for individuals is he's proposing the first-time home buyer tax credit. And this tax credit is going to be $15,000 if you are a first-time home buyer. So something to consider there if you plan on buying a home. Again, these are all just proposals. He's not even president yet. And these have to be, these have to pass Congress in order for them to become law. And I'm sure there's gonna be some things sent back from the Republicans because some of these tax increases are pretty significant for wealthy people. for the tax increases, for most Americans, it's not going to affect them. I've seen some people talk about, if you tax the wealthy, it's going to trickle down to the people that are, the consumers, or the people that are, renting from them or whatever. And, maybe it will, but also it probably won't, because, the whole idea of trickle down economics, that hasn't been proven to work. Like if you cut the taxes from the wealthy, they're not going to pass that benefit down to you. No, that's not usually what happens. You might see like a small effect, but it's not going to be like a life-changing effect on you, on most Americans. How can you prepare for these changes, or at least for these proposed changes? With taxes increasing, one good thing you want to do immediately is to get all of your retirement funds in the right accounts. So if you have a bunch of 401ks or traditional IRAs, it would be a good time to consider doing a conversion to a Roth account. Because basically, if you do that conversion, you got to pay the taxes now, but you're kind of locking in your tax rate now, so that when you pull or withdraw your money from the Roth account later, you don't have to pay any taxes. Okay? One thing you should do there. Second thing is to get with an estate planning attorney, especially if you're, a little closer to a retirement, or if you're kind of up in the 50s or 60 years of age range. I mean, you should talk with an estate planning attorney when you're young anyway. But, this is a time to really make sure your ducks are in a row. If you have a bunch of assets, if you have a bunch of properties, get with an estate planning attorney to make sure, you're set up properly just in case these tax laws change. If you are currently paying for childcare and you're not keeping track of how much you're paying, if you don't have information on the childcare center or your nanny, I would definitely get that information so that you can take advantage of the child dependent care tax credit. Basically, there is a form W-10 that you can have your nannies fill out that gives you all the information that you need to file your taxes based on like how much you paid them. Okay. And then if you drop your kids off at a child care center or any preschool or something like that, just make sure you get like a tax ID statement from them at the end of the year. If you have kids, because of the increased child tax credit, just make sure you keep them alive. I think that's simple enough. Just, feed them, make sure they get good sleep, make sure they're happy, all those things. The one last thing I'll touch on here is if you have a business, if you own a small business, this would be a good time to evaluate what kind of entity it is and how it's taxed. Like I usually recommend LLCs legally to have your business structured as an LLC. But now, because of the proposed increase in Social Security tax, if you're self-employed, that's going to cost you a crap ton of money if your business is really successful. So really think about how your entity will be taxed in the next coming years. And if you need help with that, definitely reach out to us. All right. So that's all I got for today. Thanks for joining me in this longer video. I appreciate it. If you think that this video would be helpful to any of your friends, family, whatever, then go ahead and share it with them. And if you haven't done so already, subscribe to my channel, smash that like button. I'll see you all next time.
I'm in the mood for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a sticker. She picture perfect, so I told him I'm a flicker.